Welcome to the Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. Don't forget to mark your calendars for the Blockchain Real Estate Summit 2025, happening online from September 23rd through the 25th for our worldwide audience, with over 50 renowned real estate and blockchain experts and academics representing over 30 countries from around the world. Visit blockchainrealestatesummit.com for more information about the event and to subscribe to our newsletter for the latest updates on innovations in the blockchain and real estate sectors. That's blockchainrealestatesummit.com. Enjoy the show.
Hello, everybody. Welcome to the Blockchain Real Estate Podcast. I'm your host, Michael Flight, and I'm here with a fantastic guest this week. His name is Simon Barnaby from Archax. But first, before we get into the meat of the thing, want to talk to you a little bit about, don't forget to sign up for the Blockchain Real Estate Summit coming up in September 2025. It's all online. It's 3 full days, and you get recordings of the entire thing. So sign up for it now, and you get that. Also, if you'd like a replay of the 2024, again, it was 3 full days. We're going to have all new people, all exciting things. Hopefully, we're going to even get Simon on the summit again this year. Well, actually, again this year. But with that, I'd also like to mention the fact that this is not financial advice. This is not legal advice. This is not any type of accounting advice. You should always do your own investigation and always do your own thing and make sure that you know what you're getting into. With that, we've got Simon Barnaby from Archax coming to us out of the UK this morning. So Simon, and actually it's afternoon for you. How you doing today?
Great. Great to be with you here, Michael, today. Yeah, an exciting day, lots going on in the market, lots of opportunities for us all. So yeah, an exciting time. Great beginning to 2025.
Yeah, fantastic, fantastic. Well, can you give us a little bit of background on yourself, and then you can explain to us, what Archax is and how you guys have really been pioneers in trading markets for real-world assets?
Sure. I mean, my background, I've worked in capital markets around the world pretty much all of my career. So sort of very used to the way institutions work and how, regulated financial markets work as well. And in fact, most of the founding team at Archax all come from the capital market space, having worked at banks, brokers, exchanges, hedge funds, regulators, vendors, and the like. So we're sort of steeped in the capital markets history. But, back in 2016, 17, got excited by the innovation in cryptocurrencies, particularly Bitcoin, but then others to follow, and got excited by those innovative instruments, but actually even more excited by the underlying concepts like tokenization and the underlying technology like blockchain, and could really see that there was the potential for that technology, those concepts to disrupt and revolutionize the way all traditional financial markets work. And that was kind of the prize that we saw. And we kind of realized, well, if that's going to happen, then someone needs to build the regulated institutional grade products and services that kind of bridge the gap between the new cool crypto world and the more traditional financial market space. And that's really how the Archax journey began. It was to build what we knew would be needed for tokenized real world assets to come to fruition and deliver the benefits that the technology offers. So we started a journey back in 2018 now, so a while now, and that involved setting out a vision. It involved raising money, it involved building technology, and it involved getting regulated. And getting regulated took some time. We're regulated here in the UK by the FCA. We're regulated as an exchange, a broker, and custodian for digital assets, and we sit on their crypto asset register too, which means we can handle crypto. And no one still has that same regulatory stack that we have. So we have a sort of a unique profile, if you like, in this space. But more than that, we're kind of expanding. We've just acquired a business in Spain, in the EU, which gives us the EU regulation. So that will allow us to expand our products and services into the EU later this quarter. We're looking at acquiring a broker dealer in the US, which will sort of open up the North American market for us as well. We're just setting up. Well, we have just set up actually with an innovation license in Dubai, which sort of opens up the UAE. So although we're very UK centric in terms of our base at the moment. It's very much a global vision, and we do handle crypto, but our focus is really more the tokenization of real world assets. And as some examples, we work with firms like Aberdeen and BlackRock and State Street and Fidelity and others, and particularly around fund tokenization, which is kind of where we're seeing a lot of traction at the moment. So that's a bit of background to myself and where we are with Archax today.
And was your background in financial markets or in technology, or were you like a crypto old school guy?
Yeah, well, my original background was I worked for technology companies, but not in technology roles. So I kind of worked on the commercial side of the business, but we were selling tech into the big banks and brokers around the world. So we have a very strong pedigree in that space. So I guess I'm a commercial person, but I have a good understanding of technology, and that was partly why the whole crypto side of things became really interesting, and hence this whole the Archax project, if you like, which was to sort of take that technology, those concepts, and use them in different ways for regulated financial instruments as well as unregulated crypto.
Okay, so in order to break down what Archax is, because technology is kind of mysterious, and financial markets are kind of mysterious. So you guys are kind of a regulated marketplace where people can trade, and is there more to it, or just give us an overview of what Archax does.
Sure. So, we have a suite of products and services. Sort of, I guess, starting at one end, we have a tokenization engine. That means we can create tokens on, a number of blockchains, probably about 10 or so we support now. So we can create tokens on a variety of different blockchains. That's one service we have, tokenization. Secondly, we're a custodian. We're a regulated custodian here in the UK. We're a qualified custodian in the US, so we can custody assets, and they could be traditional financial markets assets, or they could be digital assets or crypto. They can be both.
So you can custody either digital or crypto, or regular and crypto?
Yeah, exactly.
Okay.
Yeah, so we have both. Yeah. We're a regulated broker, which means we can face off to individuals as well as businesses, as well as corporates and institutions, and we can hold client money, and we can raise money through our brokerage. So we can offer sort of investment opportunities to people through our brokerage. And then finally, we're an exchange, so we're regulated as an exchange. So as you mentioned, so we can provide trading, so secondary market trading, if you like. And we have a crypto market, an OTC desk, for example, but we can also offer trading in regulated tokenized assets like real world assets. And that the beauty of having all those pieces means that as a custodian we can lock up pretty much any kind of traditional asset, if you like, and then with our tokenization engine we can create tokens to represent that asset. Because we're a digital custodian, we can hold those tokens. Because we're a broker, we can sell them and raise money for those tokens. And because we're an exchange, we can offer secondary trading in them. So it's kind of a full life cycle digital asset offering, basically.
Oh, it's very nice. That's very nice. Now, in the with the marketplace, is that 24-hour trading, or is it regulated on certain exchange days?
Yeah, so I mean, our crypto market is it's a 24/7 market, so you can trade it 24/7. On the regulated side, on the regulated side, well, I think ultimately that's the way where it will end up. I mean, at the moment, most markets trade regulated market hours just because that's how institutions are set up. But we see that changing, and certainly the technology that we have in place is all designed to be able to trade 24/7.
Oh, very nice. Very nice. So can you give us like a few examples of some of the real world assets that have been most successful, and some of the things that you've been working on?
Yes, there's a few examples. I mean, I say on the one side we have crypto assets, cryptocurrencies like Bitcoin, ETH, and others. So that's one sort of area. But then beyond that, we're kind of using our regulations to provide sort of instrument structured products that give you exposure to crypto without actually having to hold the crypto. So, for example, we have a range of capital protect notes. They're very familiar instruments in the traditional financial market space. Some of your capital, or the majority of your capital, is invested in sort of protected type instruments like short-term gilts or government instruments and the like. And then a small percentage is invested in the at-risk bit, if you like. And in that case, with us, it's crypto option strategies. So, using a regulated, familiar capital protect note structure, you can protect the majority of your capital, but also get exposure to crypto through options strategies without having to actually hold the crypto or have a wallet or trade crypto or anything. So we have those kind of hybrid products that give institutions the ability to get exposure to crypto. And
Can
then
we
on the
drill
pure
down a little bit more on the capital protect note? Because I don't think U.S. investors are as familiar with that as international investors. So if I put $1,000 in or $100,000 in, how would that be split up?
Yeah, so typically the way, I mean, they can be structured in different ways, but typically the way they work is, say 80% of it is invested in T-bills or something safe and secure with an
Okay.
income coming in. So something, and so your capital is protected, and over a period of time, the interest that comes in means you get 100% of your capital back. But the 20% that isn't in T-bills is invested in option strategies, crypto option strategies. Now, theoretically, that's the bit you're willing to risk. That's the bit you might lose. But if you do
Right.
lose it, your main capital is protected and has been generated interest. But if it performs, then you've got some exposure to the upside through a crypto options trading strategy.
Right. So you get a 20% at risk, but it could be some really nice alpha for you.
Yeah, exactly. Yeah, yeah.
Okay. And how long do those notes typically last? How
I
long
mean,
is there a lockup period?
again, the way these things are structured, they can be structured in different ways, but typically a year, say. So, you put money
Okay.
away for a year. It's your protected bid is pretty safe and gets interest, and the sort of the bit that gets exposure to crypto is where the potential upside is.
Yeah, so in the United States, it'd be better returns theoretically than certificates of deposits with the same type of time frame. It's 6 months to a year type of lockup.
Exactly. Yeah. Yeah. Very similar.
Okay.
Yeah.
Very nice. Very nice. And then I interrupted you. You were going to go on
Yeah,
to.
well, yeah. So then I was just going to go on to other things, and then maybe looking at sort of real world assets. I mean, where we probably had the most momentum build is around tokenized funds and tokenized money market funds in particular. We've been living in I know interest rates are coming down, but we've been living in a relatively high interest rate world, and anyone sitting on cash or sitting on a stable coin, for example, is not getting any interest or very much interest. And so people want to put their money to work. But often you want access to that money pretty quickly. So you don't want to lock it away and then not be able to get access to it. And so money market funds are an interesting instrument for that. Now, money market funds in the US are quite readily available, but elsewhere in the world, they're less easily obtainable. So we've been tokenizing money market funds initially from Aberdeen, and then more recently from BlackRock and Fidelity and State Street and Legal and General and others. And so the beauty of it is that we have struck deals with these asset managers where we kind of get in at the lowest price point that they offer.
Okay.
So we can offer access to these money market funds. Normally you'd have to invest, tens of millions of dollars to get access to the lowest price. Because we have that and our minimum is $5,000, suddenly we're opening up a whole host of people to get access to money market funds, to get interest on their treasury, for example, who wouldn't normally be able to get access at that kind of price point. So it's a bit of democratization in a way. It's sort of opening up a new audience for the fund managers, and we're offering access to these money market funds in that way. But the
And
other
so
really interesting.
one question on that. So the 5,000, does it go directly into the fund or do you aggregate it and then bring it in as a fund into the fund?
No, it's directly into the fund. So we're investing into the fund and providing you with tokens that represent that investment.
Okay, perfect, perfect. All right.
And the beauty of, so you might say, well, why tokenize it? You could invest in money market funds anyway. And, and there's a couple of answers to that. I mean, one, because of the way we're doing it, we're providing access to people that wouldn't normally get access at
Right.
that price point. So that's one benefit. But also, if you think about it, in the old world, if you like, you invest in the money market fund, you get your yield. That's pretty much the end of the relationship. You take your money out if you want to, but that's all you can do with it. In the
Right.
digital world, you invest in a money market fund, we give you a token. That token represents you're holding in the money market fund, you can now use that token as collateral. You could use it maybe as a payment to someone. So you've kind of got like this yield bearing currency in inverted commas, something that you can use for payments that you can transact with. So you've got a regulated yield bearing instrument that you can use in place of money. And you can do it 24 hours a day. You're not sort of tied into normal banking hours, normal banking settlement times. It's kind of instantaneous. So, the reason tokenization is so exciting is because it opens up all sorts of new and different use cases, leveraging the technology underneath it.
Well, and in terms of other options, you can leverage it, and it's a much safer thing to leverage. So it's easier to access, just like leveraging real estate. You've got like a real asset that's you can see what the value is, but if you've got Bitcoin and you leverage Bitcoin and Bitcoin drops, does one of its drop, you could lose everything. But that's something that's, pretty stable. And it's, if I was even a lender on it, I'd love to lend on that all day long.
Yeah, no, it's proved very popular. And I think, money market funds are just the start, then we'll see other types of fund come through. And we're certainly looking at some other types of funds with some of these asset managers now. But money market funds is where the action has been. And then the use of these money market fund tokens as collateral. That's kind of the next phase that we're working on with people now.
No, and I agree with you. I mean, the tokenized money market. So I think people have this paradigm of, money is a pound or money is, a dollar or something like that. But if you've got, if you need to make a $5,000 payment and you've got, $5,000 worth of BlackRock, you can just say, here you go. And it's
Yeah.
basically like the asset is the asset, and, it's valued at the end of the day, and that's what it is.
Well, yeah, and with money market funds, I mean, they trade at par all the time.
Right,
So a dollar money market fund trades at a dollar
right,
effectively.
right.
So the yield you get is either additional tokens or it's a payment like a cash payment if you like. But it stays at one. So it does have a value like a currency. Its underlying value doesn't fluctuate.
Right, right. But like I said, people know what the value of it is, so it's like dependable, and you
Yeah.
could use it as money. But even like if you went into more of an ETF or something like that, if it was tokenized, you could do the same thing. It's like, oh, I can't get my money right now, but would you take,
Mm,
a few tokens of this ETF or something? And that
yeah.
this is what they're valued at.
Exactly. And we're now looking at doing things like, at the minute, if you trade Bitcoin with us or with any exchange, typically you trade, it against the dollar, BTC against USD, a Bitcoin dollar pair. That's the normal way to trade it against a dollar or against a dollar stable coin. But actually, we're looking at listing Bitcoin versus US dollar money market fund. So
Hmm.
now you're trading directly against the money market fund. And again, the beauty of that is that all the time you're holding the money market fund, you're getting a yield. So, for example, if you put an order out in the market and it doesn't get filled for whatever reason for some days because you're waiting for the sort of the market to move to where you want it to be, then all the time you're sitting on a yield bearing side of that transaction. So, it only moves from the money market fund into Bitcoin at the moment of the trade. So you're not having to take money and convert it into pounds or dollars or a stable
Or
coin.
stable
So,
coin.
yeah.
Yeah. Do you do anything with pound to Bitcoin, and is there any type of market for pound stable coins?
Yeah, there is. I mean, funnily enough, that's another use case we're working on a lot is the stablecoin area. We've probably got more than 10 projects now, stablecoin projects. We're not the issuer as such. We're working with people who want to issue it. But what we do, we can do a variety of things. Sometimes all of them, sometimes just some of them. But we can take in the money, for example, behind the stable coin. We can hold it in custody. We can hold it in money market funds because typically people want to put it somewhere where it's going to get a yield. So we can hold the underlying treasury with our custody service, and obviously we can do the tokenization using our tokenization engine. So we're kind of a partner with stablecoin issuers because we can provide that underlying infrastructure and the treasury management and things like that. And so we have a number of those sort of stable coin instruments we're working on. Most are US dollar. based, but some are GBP, and I think there is a use case for a GBP stablecoin. And in fact, we announced one last week with a partner called Agant, where they're issuing a GBP stablecoin, and we're providing the sort of the token, the underlying treasury management for the reserves that sit behind the stablecoin.
Very nice, very nice. And you think that's going to be a lot of payments, or do you think it's going to be, trading, or where do you expect the demand for that to come?
Yeah, I think it's a mix of both of those things, really. I think probably the payment side is an obvious one. Anything that streamlines payments, that makes them more efficient. It means you can pay people more quickly. You can pay them 24/7. All those kinds of things are good. And even in the
And you
kind
can
of the
actually find where the wire went because you don't have to worry where the wire went.
yeah.
Yeah,
And in the natively digital world, you want on-chain payments. You want
right.
okay, maybe it needs to be a fiat related payment, but you kind of want it all to be digital on-chain. You don't want to be coming in and out of the old traditional fiat banking system. So I think the use case for stablecoins is massive. I mean, there's a lot of them now, and it remains to be seen which will which will do the best. I mean, there's obviously some USDC and USDT from Circle and Tether are the big sort of established ones. But some of these new ones are looking to offer yield, so a stable coin that delivers yield. So it's kind of similar to a money market fund in that respect. Those kind of instruments are particularly interesting.
Yeah, yeah. Some of them are downright scary because it's like, well, because I really don't do math, and when there's all kinds of formulas and stuff behind them, it's like, maybe you could just hold, and I don't trust the governments either, but maybe you could just hold the treasury or some gold and,
Yeah.
or some real estate. You can see that there's something there versus an algorithm.
Well, yes, and obviously algorithmic stablecoins got a bit of a bad name
Yeah,
back in 2022. So I
definitely.
think everyone's very cautious about those, but I think they're being approached in a different way now, and regulation is kicking in. I mean, in the EU, MiCA have come up with sort of regulation around stablecoins. So I think that's it's becoming a bit more institutionalized in a way,
Right,
but
right.
but in a good way, because you kind of need that that safety and security behind them, because people worry otherwise.
Yeah. And since this is the blockchain real estate podcast, tell us a little bit about you guys, have been in one of the first use cases. I met Archax and some of the other people out at, man, it was in London in 2020. I think it was February 2020. And it was a security token conference. And you guys, were large sponsors and had, you were, like I said, you were some of the front runners in terms of getting your technology up and working on regulations and stuff. And at the time we talked, and you foresaw a giant future in real estate. So do you still see that, or do you think that the financial markets need to come first and then, real estate needs to plod along?
Yeah, I think real estate was probably one of the original use cases that everyone thought would be the thing because, bring liquidity to real estate, democratize it, all those amazing things. I think the reality is there have been some, real estate projects that have been tokenized, and there are some we're talking to and stuff. I think it hasn't gained that traction yet. I think probably what the world was waiting for was some use case that got more broader attraction and interest from sort of the institutional, from the traditional world. And I think, funds and money market funds have now provided that. And certainly one of the things we're looking at is, real estate funds. Those, I mean, I think they could be the next thing that we look at with tokenization. But yeah, still do believe that, tokenizing real estate is a great way for property owners to get value out of their holdings, and I'm sure there's a massive base of people that would love to have access to the real estate market. And currently, yes, there are things like REITs that give some kind of access, but I think you can do so much more with tokenization. So I think it's one of those things that it will come. Another, a similar thing was sort of fixed income debt bond type instruments. Again, I think they always looked like they were going to be one of the original use cases, and to some extent they have succeeded. And in fact, we had a partnership we announced with Obligate a couple of weeks ago, which is all about we're tokenizing bonds. So I think many of these things everyone thought they were going to happen really quickly at the start, and it's taken a bit of time, but it doesn't mean to say it's not going to happen. It's just, some of these things do take time. And sometimes you need something to really be the catalyst of change. And I think money market funds have been that.
Well, and I think one of the things since 2020 and even 2019 has been the regulators and how they were going to regulate it. Because I got into it, 2017, 2018, and I'm like, oh, this is really great because, there's like large pools of capital and, people are investing in like dog coins and stuff. So if you can give them something that's substantial, why not do that? It would free up, savings all over the world. People could get, stable things. And it turned out that, most of the stuff that you and I work in are regulated. So it's like, all right, we need to get you guys up to speed. And then the regulators are sometimes captured by the financial, institutions there. And the financial institutions are a little bit worried about, where their bread is buttered. So it's taken some time, but I think we're pretty much ready to go, in
Yeah,
a
I
lot of this
agree.
stuff.
I agree. I think, regulation has been a challenge. And I think it's not, in some cases, it's the lack of regulation that was the challenge. And a lack of clarity around regulation has
Yes.
been a
Yeah.
challenge. And then
Yeah.
a lack of consistency of regulators. You've got some regulators around the world who are far more advanced in how they look at digital assets and crypto, and others lagging behind, which makes it difficult for global financial institutions to
Like the
get
United
involved.
States.
Yeah, but then but then we're actually seeing change there, I think now.
No,
So
no,
that's
I
all.
think things are going to
But but
change,
yes,
hopefully remarkably for the better, and some clarity. But that was the
yeah,
key thing because, even back in 2020, I was talking to somebody from Archax, and one of the issues was custody and custodians, and institutions couldn't hold digital assets because they can't hold it directly. So, who's custodying it for them and stuff like that. And there was a lot of things that, I didn't think about, and most people didn't think about because it's like, hey, let's just throw this up on a blockchain and we're good. It's
yeah.
like, but there's certain investors that just can't do that. So,
Exactly. And institutions are heavily regulated and conservative and take their time. And for all this to be successful, we need the institutions involved. That's where all the money,
well,
that's
and
where the
rightfully
power and
so,
the money.
because
Yeah.
rightfully
So
so, because it's somebody else's money. So they
exactly.
should
Yeah.
be a little bit conservative and see where it's going instead of like, dropping it into a Ukrainian, project
Yeah.
that's a
That's true.
rug
But
pull.
but we're
Yeah.
definitely seeing change. I mean, in our lifetime at Archax, in the early days, the institutions were very cautious and took almost sort of took the view that they weren't getting involved in the space, that it was too risky. But over time, they've all started to get involved. They've all got teams of people looking at it, and now there's active projects. And it's kind of moved from the world of proof of concepts to the world of real world projects around tokenized real world assets, which is showing the signs of the maturity that's coming in, and the momentum that's actually building now.
Right, right. So what's on the agenda? You had said you're looking to, and are working on a broker dealer in the United States. Do you think that, eventually you would do an ATS in the United States? And, what's the roadmap for, global expansion and global domination for
Yeah.
Archax?
Yeah, so yeah, we're looking, as I mentioned, we'll have a presence in the EU soon. So, post Brexit, that sort of opens up the EU region to us again, which is great. We have this presence we're setting up in DIFC in Dubai, which means we can look at the UAE, which is an exciting space. We're in conversations with someone about a joint venture, a large Asian business actually, which would see us have a joint venture in Hong Kong. So that could open up the Southeast Asian corridor, which is a very interesting space. But the US is exciting. I mean, we had our own broker dealer and ATS application underway for a while in the US, but in the
Hmm.
end we paused it because there was too much uncertainty, and these
Right.
things cost money, and we're a relatively small company. So in the end we sort of put it on ice whilst we waited for more clarity to come. Obviously, last year with what everything Trump was saying, and then him getting elected, it was clear that things were going to change in the US. And so it's a very, and it's a, it's a massive market, and it's a very important market globally. So we're keen to have a presence there. So yeah, so we're in the process of working to acquire a broker dealer with an ATS there. So that would give us that space. And then beyond that, and I mentioned this acquisition in the EU. That also has some additional permissions around derivatives.
Okay.
So that's something we didn't have before, but we will get once this acquisition goes through regulatory approval, which I say should happen this quarter. So then the derivative space is interesting as well, because that's another area that we could branch into. So for us at the moment, it's it's to do more of the same that we're doing out of the UK here, but in other regions, and then to look at other product sets like derivatives. I mean, and then there's all sorts of other interesting real world asset use cases. I mean, we recently worked on a project with Tezos, the blockchain
Right.
foundation, on tokenized uranium. So they're seeing a huge demand for uranium. With this sort of and it's a commodity that's very expensive and difficult to get exposure to. So
Right.
sort of opening up the potential for people to invest in uranium is a really interesting use case, I think, as well. So I think that's the other. Is one thing is kind of taking familiar assets like funds and tokenizing them to open up innovative ways of using them. And the other thing is kind of interesting new projects like tokenized uranium and other things like that, which I think is quite exciting.
Well, energy is the future, and AI is going to use an incredible amount of energy. So you're going to have to like build a lot of nuclear plants that's the only way that that's going to scale. So
Yeah, exactly. And I think AI is another interesting area. I mean, we're working. I mean, one of the challenges you always have in sort of analyzing instruments and keeping up to date with things. I mean, we're developing AI tools that help us with that.
mhm.
So I think that's something we're another sort of product area we're going to look to branch into, is the use of AI in the sort of financial markets world.
Very nice, very nice. Well, now that the United States has a president that's issued his own meme coin, some people would call it a poop coin. But are you gonna like work with the prime minister to issue a meme coin too, or
Yeah,
maybe get the King Charles meme coin?
I
So
think a royal meme coin could be quite interesting, couldn't it? Be
yeah,
something quite uniquely British.
yeah,
Yeah,
exactly.
we'll see. We'll see. I haven't nothing hot off the press on that front at the
You should
moment,
bring it
but
up with
you
him,
never know.
okay?
Yeah,
I'm
next
tasking
time I
somebody at
speak to him, I
Archax.
will. Yeah.
Say, guys, I got an idea for you. Hear me out.
Yeah.
If Trump could do it, think of how big the British could do it. Um,
Yeah. Yeah.
well, that's very cool. So anything else that you'd like to talk about in terms of like what's exciting or what, people in real estate would get the most benefit from Archax?
Yeah, I mean, I think, one thing we're always interested in is new issuances, new investment opportunities, new assets that would benefit from tokenization and opening up sort of to new audiences of investors. So those kind of things we're always interested in. And if any of those are real estate related, then like we said earlier, it's always been that kind of use case that one felt would really benefit from tokenization, and it would be great to see that happen. So yeah, we're always up for talking to people about their thoughts around bringing investment opportunities on chain into the token world. So yeah, and if that could be related to real estate, then that would be awesome.
And in your view, because you touched on it a little bit, and I do want to like tease that out a little bit. Um, in your view, do you think real estate funds that are more diversified and larger and, assets spread over like maybe, a few different geographies or, just larger are going to go first? Because we've had a lot of smaller real estate assets, but, you've got a concentration of risk for the smaller investor. So do you think that larger funds that might have some more diversification, might be, something that scales?
Yeah, I think you're probably right. I think the trouble with tokenizing a building or something is it's very narrow and hence risky, and actually some kind of portfolio of properties. And a portfolio of properties could be, you know, across different regions, or it could be a type of across a certain
Right.
type of or category of property in a region, and there could be different ways of building portfolios. But I think they, you know, they would there be more interesting. I mean, it's like, you know, I remember talking to people who were, you know, tokenizing a painting or tokenizing a classic car. I mean, those
Right.
kind of things. I mean, they sound quite interesting, but really, who wants to invest in tokens in a, you know, a car or a painting, even if it is valuable?
Yeah.
Actually, a portfolio of art or a portfolio of classic cars is much more interesting. And I think those are the kind of things that will definitely generate the most interest first. I agree.
All right. All right. Is there anything else that you wanted to add that, you know, we didn't cover for Archax that you would like people to know about?
Yeah, I mean, I think we've covered most things that we're involved with from you know, across all the different assets and the products and services that we offer in the digital space right now. I guess one sort of area we're looking at as a next sort of a next area of growth for us potentially is the DeFi world. And you know, in this sort of decentralized finance world, you know, there's all sorts of interesting use cases. I mean, the DEXs, these decentralized exchanges, very efficient way to trade, very efficient way to build pools of liquidity. The borrow lend platforms where you can borrow or lend out your assets are really interesting too. And I think there's all sorts of clever pioneering technologies in the DeFi world that institutions could benefit from and would like to benefit from, but at the moment they can't because it's so unregulated. It's a bit like the Wild West still.
Right.
So what we're
Right.
looking at is building a regulated DEX, a regulated decentralized exchange, a regulated borrow lend platform. So we're looking at sort of taking the innovative technology that's been pioneered in the DeFi space and then using our regulatory umbrella to offer products and services that use that allow you to use regulated instruments in that space. It's a bit like the securities lending market. I mean, the securities lending market is big in the traditional world, but being able to do it through the technology in the DeFi space will be much more efficient. It could open up many more opportunities. So I think that's probably a really exciting area for growth, is how we kind of bring the TradFi and the DeFi worlds together in a regulated way.
Oh, perfect. Perfect. So if somebody wanted to invest on some of the products on Archax, how do they do that?
Yeah, well, you know, if you go to our website, archax.com, it's you can see all the things we have available there. Now, some of the products we have are open to retail investors. Some aren't. Some you have to be able to elect up to be a, you know, a sophisticated investor or an accredited investor. But if you can elect up as an individual, then that opens up more products. And yeah, on our site, you can sign up for an account. You can trade crypto. You can invest in tokenized funds. Again, depending on the jurisdiction you come from and the type of investor you are, it all varies, but they're all available there. So everything's on available through our website.
And that's archax.com.
That's it. Yeah, that's exactly it.
Okay.
And if anyone wants to contact me, it's simon@archax.com. So very easy.
Perfect. Perfect. Well, Simon, I really appreciate everything that you've given us today. Learned a lot, you know, and you know, it's an exciting time, and hopefully you guys do expand and go where you're looking to go. So with that,
Thank,
just like to remind everybody that the Blockchain Real Estate Summit is coming up in September 2025. Go to blockchainrealestatesummit.com to get your tickets now. You can also get the entire series of 2024 and some additional bonus material from our past Blockchain Real Estate Summits. And also, as we've always said, this is not legal advice. This is not financial advice. This is not accounting advice. The things here are just opinions, and you need to research everything you do. So with that, Simon, thank you very much for coming on today.
thank you, Michael. Been a pleasure.
Thank you for tuning in to the Blockchain Real Estate Podcast, brought to you by the Blockchain Real Estate Summit. Don't forget to mark your calendars for the Blockchain Real Estate Summit 2025, happening September 23rd to the 25th, online for our global audience. Secure your tickets today at blockchainrealestatesummit.com/registration. If you enjoyed today's episode, please follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback helps boost our visibility and allows us to reach more listeners like you. Have a guest in mind you'd like us to interview? Let us know by leaving a comment at blockchainrealestatesummit.com. Thanks again for listening, and we'll see you at the summit.
Adam Carswell, the voice of liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.